I wish I knew what a stock split was, but I'm too embarrassed to ask. A stock split or share split is when a company decides to increase the number of shares it has in issue by giving its current investors extra shares for each existing share that they already own. Extra shares. Sounds great, but of course, shareholders aren't really getting anything extra. Each investor still holds the same percentage of the company as they did before the split, it's just that it's divided into more individual shares. As a result, the company's share price will fall to reflect the larger number of shares in issue. For example, say a company had 10,000 shares in issue at a share price of £1 per share. It carries out a 2-for-1 split so that each investor ends up with 2 shares for every one they originally owned. The total number of shares in issue is now 20,000 and the share price falls to 50p. Think of the company as a pizza. It doesn't matter how many slices you cut the pizza into, it's still the same pizza. It hasn't got any bigger, and if you cut it into 12 slices instead of 6, you still won't feel any fuller after eating it. Similarly, you can double or triple the number of shares in issue, the company itself hasn't changed. At least that's the theory. And yet, after a stock split has gone through, the share price often rises, as we've recently seen with both Apple and Tesla. Some argue that this is because splitting the stock makes it cheaper, and so it opens the stock up to smaller investors who couldn't previously afford to buy in. That seems dubious, especially as today's investors can get exposure to most stocks through various low-cost methods. A better explanation is that companies tend to do share splits when they are doing well, so that share prices rises because the company is already popular, not as a direct result of the split itself. Stock splits may also be a sign that a market is getting overheated. Stock splits were very popular during the dot-com bubble in the late 1990s, and we all know how that turned out. For more on that topic of bubbles and valuations, subscribe to Money Week magazine.